Welcome everyone to this, the third webinar in our series of the Mastering SAP webinars as we build our way to October to the Mastering SAP conference. This is the first of our financial themed webinars, and today we have Mastering SAP Financials keynote alum Dave Axson for you, which is a real treat. David always scores as the top speaker every time he comes and speaks for us here in Australia. David will be speaking about finance excellence in a post-COVID-19 world, focusing on planning, forecasting, and analytics. And we want you to participate, not just listen, to fire questions at our speakers. And you can do this by going to the question manager that you can see in the top of your screen and fire away. And we'll try our hardest to get to every question. If we can't, rest assured we'll make sure we answer them afterwards and you'll get the response from our experts. Now, it's my great privilege and joy to welcome our sponsors, Synity, one of the premier sponsors at the Mastering SAP event, formerly Back Office Associates, but now rebranded Synity. And our host is Zarina Stanford. She's Chief Marketing Officer at Synity. And prior to Zarina's role at Synity, she was CMO for SAP here in APJ. Zarina was also named Woman of the Decade in Tech and Innovation at the Women Economic Forum in 2018. Zarina will lead our conversation with David Axson. And with that, I'll hand straight over to you, Zarina.
Thank you, Steve. And to the Mastering SAP audience, it's been really a great pleasure. This is my third year being associated with the organization. And really thank you, Steve and Lisa and everyone on the Mastering SAP team, helping us provide forums as what we're doing. It really gives me great pleasure, as you just talked about, David Axson, our keynote speaker here today, is an alumni, is a thought leader, is a keynote and author. If I go through all of, David, your repertoire, it's going to take a long time, so I'm just going to give you a little bit of snapshots, right? 35 years of advising businesses over 40 countries, ranging from strategy, finance, technology, and we'll get a good taste of it today as you share your point of view and your thought leader thoughts surrounding this new world, or for that matter, what I'm about to call the next normal. So with that, without further delay, let me hand it over to you, David, and have you kind of cast our conversation for the day.
Great, Zarina, thank you. And to the team at Eventful, it's my pleasure. I've been working with you folks now for close to 15 years. It's always been a pleasure, although I'd probably rather be in Sydney or Christchurch or Melbourne than here in Akron, Ohio. Although it feels like I've just got in a time machine because it's Wednesday evening here and I'm joining you at lunchtime on Thursday. So I hope you're all enjoying yourselves. Before we get started, let's do a first of our 4 polling questions. It's really good to get your insight on to what extent the pandemic is triggering shifts in how your company thinks about financial planning, forecasting, and analytics. So maybe we can share the first poll question and you can select from the 4 answers. A, significantly, B, somewhat, C, barely, and D, it's inconclusive at the moment as to what impact it's going to have. So let's run the first poll. We'll give it a few seconds before we come back and share the results. Okay, it's pretty interesting here actually. 31% are saying significantly, 52% are saying somewhat, 10% are saying barely, and around about 4.5% are saying it's inconclusive at the current time. I think that's what that is telling us, that 9 out of 10 companies, are seeing significant change already as they think about planning for 2021 and beyond. And I don't think that's a real surprise to me or to anybody, because as I will tell you, in my 35 years in finance, this is the most significant disruption we've experienced. I went through Black Monday in 1987. I went through the dot-com crash at the end of the 90s, immediately followed by 9/11 a couple of years later, and then we had the financial crisis of 2007 and 2008. but the speed, the global impact, and the duration of what we've been experiencing since early March is somewhat unprecedented. And anytime there is a significant disruption in business, finance comes to the fore because businesses are looking for insight, they're looking for guidance. Cash conservation, capital allocation become incredibly important, as well as beginning to identify those opportunities that present opportunities for growth in the future. But just sitting here today, think about your own situation. How many of your plans for 2020 correctly projected the impact of the COVID-19 crisis? How many of you were able to really predict the impact on not just US unemployment? I show the US data here, but the data around the world is equally dramatic. We went from a record low post-war unemployment rate in the United States of just under 3.5% to a little over 14% in the space of 6 weeks. What about Chinese GDP declining for the first time in recorded history by 6.5% in the first quarter of 2020? Global retail sales declined by $6.1 trillion. I don't know what $1 trillion looks like, but it feels like a really big number. And if you're in the retail space or you're in the supply chain that supports the retail space, that's a seismic shock that becomes very difficult to adjust and respond to. We just saw retail sales numbers in the United States come out a couple of days ago that showed the single largest ever rise in retail sales, still below last year's numbers. So we're really dealing with unprecedented volatility. Oil prices declined by 50% in less than 4 weeks, and the euro rose by 8% in 8 days against the US dollar, two of the major trading countries in the world, having a significant impact on financial performance, planning projections, and largely consigning most of our budgets that we carefully crafted over many weeks and months in the latter half of 2019 to the rubbish bin. So given all that uncertainty and volatility, is planning really even worth the effort? Well, I think the answer has to be very clear. Planning is even more important in times of uncertainty. But what is incredibly important is the way you plan and the way you think about planning in the context of the environment in which you're being forced to operate. So let's delve down that in a little bit further. We're really in the first stage. We're beginning to see companies respond to COVID-19. We've seen significant structural changes in a number of industries, whether it's restaurants pivoting towards more of a takeout or a delivery business, whether it's aircraft companies having to suspend operations around the world and really think through how they can begin to conserve cash and capital to sustain them until we see whatever this next normal is going to look like. So we're still in that respond phase. And as finance professionals, we're being asked to identify opportunities for cash conservation and expense reduction, but we're also being asked to look to the future and say, what is it going to take to actually rebuild our businesses? How quickly are we going to be able to capture opportunity and demand that may exist in the marketplace? And what are the operational implications of all of these changes that we're beginning to see in terms of where we place our bets going forward? We've seen significant decline in valuations of many organizations, and incredibly, we've seen a very significant bounce back. What opportunities does that present for you? Are your companies beginning to look at this as an opportunity for consolidation? Or maybe it's an opportunity to divest businesses that no longer make sense in whatever this next normal may turn out to play out to be. The final step, and to me the most exciting one, and I think the biggest question is how quickly we can get there, is how do we reimagine business? How do we adjust to redefined expectations of our consumers? How important is safety? What does the manifestation of safety and trust actually mean in our businesses? How do we create the investment capacity to be able to make those types of adjustments? If you're a restaurant or a bar operating at 60 or 75% of normal capacity, but are also having to invest in safety equipment for not just your employees, but also for your customers, how does that impact margins? do you have the information and the data necessary to fuel the financial analysis of all these alternative scenarios and the different sensitivities that are going to be that are going to impact your business moving forward? We're already beginning to see some new business models emerging. Even a company as large as Amazon largely had to suspend its Amazon Prime 1 or 2 day delivery shipping commitment as a consequence of the demands being placed upon its business. We're already seeing shippers impose premium pricing for suppliers that actually want to ship more than their normal volume of business. These are all variables that we need to look at and say, is this just a temporary blip in the economics that are driving our business? Or is this a structural change that we're going to have to price in? Do we pass the price on to our customer? Will they allow us to do that? Or are we going to have to eat that price change and actually look for productivity and cost improvement opportunities elsewhere into our business? As a financial planner and a modeler, these are great and really, actually, I think, very exciting questions to try and address, despite the very dire times that many of us are facing at the moment. Our ability to be able to garner the right data, market data, operational data, financial data, coalesce that into meaningful insight that can support faster and more accurate business decision making is really the true value of finance within our organization. And as I mentioned a couple of minutes ago, the opportunity to restructure portfolios, whether that's taking advantage of some of the easy access to capital that's been made available through federal stimulus in many countries around the world, creates some opportunities to begin to think about where do we make money and where perhaps should we begin to harvest or potentially sell or divest certain parts of our business. What I can tell you is our ability to be successful will not manifest itself if we continue to plan and budget and forecast in the way we've been doing it for the last 50 years. Historically, our environment that we've been operating is we've tended to build annual plans and budgets. We sit down in September or October of one year and develop a very detailed financial accounting centric view of the future that gives us a very precise but not very accurate view of the future. We have a single number that says we're going to make 4.6 million Australian dollars in the first quarter of next year, with no accounting for variability in that single view of the future. It tends to be a very static view. We're still measuring performance to budget and variance to budget long after reality has proved that our budget is no longer an effective mechanism for allocating resources within our business. We also tend to look at the trend. How does the past influence the future? Well, unfortunately, the past has been a lousy predictor of the future in about 8 out of the last 10 years. So if you start building next year's budget based upon this year's actuals, there's a better than 80% probability you're not going to have a very accurate view of the future. And because we're finance professionals and we're very creative, we've made the spreadsheet do more than we ever expected it to. Our ability to create spreadsheets is renowned throughout the world. But unfortunately, spreadsheets are not enterprise-wide planning systems. They don't provide you with the data standardization and governance necessary. They don't enable rapid collaboration. They don't have the integrity and trust in them. And they're slow. Creating spreadsheets, consolidating them, updating them with new base data, it's very, very time consuming. So the traditional methods won't work. But let's move to another poll question. I'd be really interested to see what are those statements that I just made. How many of you relate to them? How many of you were saying, not at all, option A? Some of the elements in my list resonate to you, so there are still some legacy practices in place within your organization. Option C would be most elements resonate. And the final option would be, hey, that's my life. And I know I was there, so I can empathize with you. So let's see what you view of the answers to that particular poll might be. Wonderful. I love the answers coming out here. We've got a wonderful opportunity. About a third of you are saying that some elements resonate. A third of you, now actually the numbers are changing. I love live polling, it's great. 40% are saying some elements resonate, 40% most elements resonate, and unfortunately for about 1 in 5 of you, that's your life. Well, the good news is it doesn't have to be that way. We now have access to tools and technology at reasonable price points. We've democratized the availability of technology for many of our clients and organizations today that really allows you to think a little bit differently. So let's talk a little bit about some of the attributes that make up a planning, forecasting, and business management process that is tuned and relatable to today's business environment. And I don't, the thing I would guarantee is I think the only certainty about the future is uncertainty. We're never going to be in a stage where it's easy to predict future business performance. So let me just explore a couple of these elements. Instead of having an annual focus, why don't we tie our planning time horizon to trends and events? When a material change occurs, like COVID-19, we don't sit down and wait till the end of the quarter to work out what to do and what the implications are for our business. We want our data and our systems to be available in a timely fashion. We don't want to have to wait for the accounting books to close and reports to be generated, which in many companies is still a 2 to 4 week process. And how you out that you lost money 6 weeks ago? You've already wasted a significant opportunity to take mitigating actions, or in a more positive outlook, to accentuate the upside if certain tactics or business strategies are paying off far better than expected. And instead of being an accounting-centric view, why not a decision-centric view? Which customers or products should we be investing in? No one in your business except the accountant should need to have to understand what the chart of accounts looks like. That's not the way we manage business. We think about product, we think about promotion, we think about customer, we think about channel. We don't think about how much of our sales cost is in the travel line item versus the cost of sales line item. We want to know how much does it cost to acquire a customer. Perhaps most important in today's world is scenario-based. I would much rather have much less detail in my plan and budget, but to actually model my plan or budget under 3 or 4 or 5 different scenarios. So I have a sense of how my resource allocation may need to change as the unexpected begins to occur in my business. I've actually been working with one company recently that has made a significant in SAP and HANA and is really beginning to capture the value of that by having real-time access and being able to model multiple different scenarios. And that enabled them to begin to start to build resilience into their supply chains, which allowed them to mitigate the impact of the early breaking of the COVID-19 virus in China and reduce their dependence upon supply from that particular market. Their CFO told me just the other day that he reckons that saved them 15% of the potential decline in sales that they would have experienced if they'd been solely reliant on supply and the consequent disruptions from China. Next, we need to move from static to dynamic. We need to be able to adapt to the real-time flow of information and data. And foundational to that is a data governance and data management architecture that gives you confidence in the near real-time and certainly right-time availability of data to infuse your reporting, your planning, and your forecasting so that management and finance have confidence on that information. And instead of relying on trends, we've talked a lot in the last few years at really getting focused on drivers. What are the real drivers that have had an impact upon business? One of the interesting drivers I've seen rear its head just in the last 3 months is the impact of financial and economic stimulus by governments on the economy. The ability to mitigate the negative impact in the commercial world with federal stimulus that has mitigated the pain of unemployment or mitigated the pain of financial or cash shortages within businesses has really been unprecedented and is a significant driver that we should be factoring into our planning moving forward. And finally, if we're going to make all of the first 5 things happen, we've got to move from a spreadsheet-driven world to the one that's much more focused around a platform that integrates all the sources of data, makes them available in a multidimensional view, and allows us to begin to extrapolate from that data under multiple different scenarios and sensitivities. So we can do that what-if analysis and really begin to understand the sensitivity of key elements of our business to changes in the environment in which we operate within our entities. So let's talk a little bit more about some of the best practices. I'm not going to go through all of these in detail, but what I will do is just pick out a few ones that I think are most significant and critical as we move forward. And all of this information will be made available so you can peruse some of this at your leisure. What we're increasingly seeing on the left-hand side here is a move to much more rolling and statistically modeled baselines. The ability to capture rich insight from the vast amounts of data we now have access to. Nearly every business transaction or business interaction has a digital record associated with it. That gives us an unprecedented resource to begin to look for relationships and correlations and causations that can help us begin to create a baseline for our planning and forecasting that is rooted in reality, rather than rooted in some top-down target setting that comes out in a vacuum without any understanding of the market and operational drivers that make up that. A rolling time horizon allows us to begin to the future in response to the real-time flow of information within our business. Incredibly important. We can't wait to the end of the month or the end of the quarter to begin to assess the impact of material events in our business, both negative events that we want to try and mitigate and positive events that we want to try and accentuate. Perhaps most important in this list is risk-weighted. How do we understand the relative risk? Not all line items in your P&L are created equal when it comes to risk. And unfortunately, one of the most risky line items is what I hope is the biggest number in your P&L, which is the sales line. It's a lot easier to predict with accuracy rent when you're based on fixed contracts for facilities and real estate that you're dealing with. It's a lot harder to predict with confidence variability around highly variable line items that are subject to market forces like the sales line. So beginning to build a risk weighting into your planning, forecasting, and reporting allows you to understand the level of confidence that you may have in different elements of data. If we move on to the right-hand side, and I'll talk a little bit more about data in a minute, but when we think about level of detail, when we look to the future, detail does not necessarily equal accuracy. In fact, the more detail you put in your budgets or forecasts, the only certainty is the more variances you'll create. Now, when we look backwards, more detail does equal more accuracy because it's very difficult to change history. But when we're thinking about the future, we really need to understand how we can match our level of detail in our plans and forecasts to our predictive ability. Because if we give the illusion of predictive accuracy in budgets or forecasts, there's a real risk that business management will make decisions on the basis of numbers that have no grounding in reality. So again, it comes down to the quality, the trust, and the rigor that we place in our data. When we think about reporting, we're moving away from calendar-driven books at the end of the month or the quarter to reporting that is very much event-triggered or self-service in nature. You go where you want and you get the data you need based upon the question you're asking or the decision that you're trying to make. And perhaps most interestingly is we've got to compress the cycle time. World-class companies today can develop a plan in less than 4 weeks. The average company is still taking between 3 and 5 months to build its annual plan and budget. World-class companies can reforecast their business in less than 1 day. In a prior life, I was the head of planning for a large bank here in the United States. And 20 years ago, it took us 20 days to do a forecast. In 2 years, we were able to shrink that down where we could reforecast the whole bank in 8 hours. The ability to be able to do that allowed us to react and respond to events in the marketplace. But it required us to really hone in on that data that really mattered and stress test the relationships that we wanted to model in order to be able to deliver confidence to business leadership about the decisions they should be making. Data is probably the most exciting area. You know, we used to struggle to find data. The only data we had was financial data in the general ledger. Well, now we have a financial record of every interaction, but we also have incredibly rich new and emerging data sets, operational data around volumes and cycle times, customer data around foot traffic, around number of stages to sell, number of interactions you need with a customer before you can close a deal. And perhaps most interestingly, as we think to the future, is how does data help us think through transformational initiatives, whether that's structural change in our business model or whether it's the ability to adjust and adapt our portfolio to take advantage of new opportunities, to take advantage of acquisition opportunities that may exist in the marketplace, or divestiture that allows us to begin to rebalance our portfolio for the new world. So the ability to leverage that increasingly rich data requires a very robust data platform and governance architecture that allows you to have confidence to be able to use that data for better decision making. And most importantly, when we think about the information we're now getting, make sure we ask the right questions. We've always been pretty good at asking the question, how are we doing? We're making money, we're losing money. Okay, that's interesting. But why? What is driving that performance? And it's not just volume, rate, or mix analysis of a variance. It's what's that volume variance. Was the volume variance a result of a supply chain problem that made it impossible for you to deliver product to your customer? Or was it a lack of productivity in your sales force? The fix to those two drivers of a sales variance could be very different. Most importantly, and finance's value will ultimately be measured by what can we do better in the future. And that's really the insight. If we can understand the cause and effect relationships in our business, we can provide insight to business leadership on those levers that they can pull or those drivers that they can influence that are going to positively drive performance in the future. How do you put all of that together? Well, this is what I like to call my Rosetta Stone slide. It explains everything on one piece of paper. At the bottom, we have all of these wonderfully rich data sources. On the left-hand side, we have the different dimensions we want to view that view that data. It used to be we just had a count and time period, the two at the bottom. But increasingly, we want to look at that data and dimensionalize it around channels and services and products and customers. On the right-hand side, we just don't want a P&L and a balance sheet. We really want to understand the drivers of that profit. We want to understand a diverse range of metrics, both capital and profitability, but maybe also productivity, customer satisfaction, net promoter score, market share. We want to understand the risk factors that are impacting our business. What is the regulatory risk? What are the technology risks in our business? What are the supply chain risks? And then the other foundational elements that support our ability to deliver rich information. What are our allocation rules for allocating costs? How do we define our activity drivers? And what are the right cost elements in our business? Those foundational components on the left, the right, and the bottom really then fuel our ability to look at data in different ways. Transactional views of data, incredibly important. Informational views, yeah, we still need reporting. But what we're really looking for is analytic views that explain why we're doing what we're doing and what we can do to influence that in the future. And we don't just want actual and forecast. We also want to think about aspiration, what could we potentially achieve? And in terms of the views of data, we've got to move away from simple variance analysis to embed sensitivity and scenario planning as foundational elements within our performance management platform. The great thing today is the data, the tools, and the technology are increasingly available and can be deployed at relative speed to allow you to begin to take advantage. one of the challenges is to liberate ourselves from our spreadsheets so we can begin to think to the future and start to understand how these types of frameworks can empower our business and drive more effective decision making. Which really leads me to my final point. All of this foundation is only as good as the actions that result, only as good as the decisions that we make. Perfect information that leads to a bad decision. We haven't really, as finance professionals, done our job right. I advise all my clients, and I embrace it in my own world, that finance's job starts when we deliver the report or the analysis, because the value that we deliver is only as good as the actions and decisions that result from the reports and the analysis that we deliver to our business customers. And that really is the essence of what profitability and performance management in 2020 and beyond will begin to look like. I think we can take advantage of the environment we're in today to make a very compelling argument as to why we finally need to change and get rid of some of those outdated practices that we've relied upon for so long. Now, I'm going to hand it back to Zarina at this point, who will talk a little bit about how Synity enables some of these components that I've talked about. But please feel free to flow questions through the question manager, and we'll get to the point where we can answer those towards the end of the presentation. So, Zarina, I'll hand it back to you.
Thank you so much, David. You gave us a lot as finance professionals to think about what are the things that we could do to contribute to the bigger cause, as well as to contribute to the overall profession at large. Before I dive into a little bit about Synity and how we could actually help and how we have helped in some cases, I wanted to maybe tee up another polling question, just to kind of get a sense on some of the key priorities that each of you in the audience, as you embark and as your company begins to move into the rebuilding phase, what may be some of these priorities that you're considering? As an example, is it the fundamentals of working capital and profitability, or is it balancing supply and demand? As a critical question for many of us, especially those of us who have supply chain challenges at hand, or really take a big leap and move forward into, as David mentioned earlier, a portfolio transformation. Maybe it's a merger acquisition or maybe divestiture, or the basic of continuous sustaining the business at large, right? Whether it's considering moving to the cloud or just really making sure the lights are on, or maybe you're concerned about all of the above. So let's take a look at what people are seeing. Interesting. I cannot could totally anticipate that with the community like as we have here, number one still, I mean, a big part of the number one is still really the working capital and profitability. And interesting, the business continuity, and as we switch now, a little bit of balancing supply and demand as well. Not as much in terms of the bold move of doing merger acquisition and divestiture. And well, but there's still the majority. I guess the largest majority is still all of the above, right? So this is very interesting. And it'd be interesting to see that as we reflect, the different industries have been taking a slightly different approach to them as well, too. So thank you all for participating into that. Let me go jump into, and as Steve mentioned earlier, some of you as a part of the SAP community may have heard of us and may have worked with us and known us as back office associates. We actually rebranded into Synity at Sapphire last year, approximately at this time. And for those of you who were with us, really thank you for stopping by. And the reason we did that is because the role of data, which is everything and anything that we do, have really taken a very different role. Is very much not only the back room, the front office, and very much into the boardroom as well, which is why we felt that it's important for elevating the data and the business synergy, as well as the potential that we can reach out. We are a software-led services company. So for those of you who have been a part of our ecosystem, thank you very much. We are, in fact, a solution extension partner of SAP, which is why this community is very close to home for us. And in fact, some of you are aware of the fact that our solution, our software, is actually available to be procured directly from SAP as well as from ourselves. Proud to have been the fact that we've been recognized around among the industry. So I'm not going to drill too much into that, but thought that maybe is important for us to really take a look at, what are some of the things that people are thinking about. David, you've mentioned earlier about transformational and operational elements and initiatives. Interestingly, the major that we focus on is to help customers in their data transformation as well as data operations for the purpose and in the aspect of providing business outcome. As an example, improving working capital, or driving resilient supply chain, or managing vendor duplication, as an example that I'll touch on a little bit later as well. I do wanted to highlight the fact that there are, and I noticed that there are some questions coming about. So if you would allow me to just dropping down to the next view, and maybe we can pause and look at some of the questions as well. At the end of the day, what we believe to be really important is turn this beast that we call data from that of potentially a liability into an asset. Just the same way as that if we do risk management properly, we can actually turn risk management into an insurance and move that into a competitive advantage for your business as well. So that's kind of what we believe in, and that's our point of view. As we enter into this pandemic situation at the beginning of March, very much like February, March timeframe, we began to engage with a lot of our customers, and we've been very blessed to have customers around the world in all different regions and heavily into the Australia and Singapore and APJ space as well. And we were seeing these are some of the concerns that at the time, and I would look to at this point in time at the left side of the page, that we were looking at, and customers were asking us, and we're asking ourselves, is how do we help our customers to rapidly respond to the situation? So as an example, and just really case in point, right? Liquidity is king. And there are actual customers whom we've been working with during that very moment to talk about, can I in fact assure of my cash position? Or can I answer the question, the fact is that how confident are we of the customers being able to pay for their invoices? And the like is the same as in our case. And as a small company, we have faced the same thing in terms of managing liquidity as well too. The whole disruption, and the reality is that I'm going to give you one example. David, you talk about reporting. You talk about seeing real-time analytics. And this is one that's really right at home. I'm here in Texas, and one of the public hospital in the Dallas area really have a momentous task in front of them, which is how many people do we have in the waiting room against all the other critical metrics that they have to measure? As an example, clinician statistics, beds availability, the response time, and all those elements that they have been looking at the dashboard. And when COVID hit, all of a sudden, the uncertainty and all that metrics begins to be a bit of a challenge. So we really quickly came in alongside with SAP and really helped them integrate all of their data to contribute to those critical metrics and apply them into the real-time dashboard that they have, which is a digital boardroom. And now they're seeing all the statistics and all these metrics all in one place, if you will, a single source of truth. So we're very, very proud to have been a part of that. In fact, if you go to the SAP website, you'll be able to see that video as well. This is actually Parkland Hospital. Now, as we move into, and in some businesses, in some industries, they're still in the response/rebuild stage. And David, you mentioned is that for those that are, world class, and I'll quote the statistics here, is that for those that are very digitally transformed already, their ability to actually act and quickly rebuild and potentially, and for that matter, execute on their reimagination was rapid. At the virtual summit, which we, Sanity here, hosted back in the beginning of May, Unilever and Rahul, who is the Chief Digital Transformation Head at Unilever globally, shared this fact with us, that because they have been so digitally ready, they were able to actually reallocate and reassign 3,000 to 4,000 employees within a 3 to 4 weeks window. That is because they have the digital platform already. So I like to kind of hear from the audience in terms of how ready and how embracing are you, and in your area specifically, because you are the holder of the wealth as well as the liability of the company. I'm going to pause here and see if we can maybe just take a moment to look back at a couple of questions. I'm going to look through it in here. Peter asked a question. I'm going to go back to that so I can see it. Peter asked a question, and maybe, David, you can help me with this one as well, too. What are the steps organization can take to shift from variance analysis to scenario planning and sensitivity analysis? And what about drivers-based management? What is the process around identifying and validating the right drivers that relate to financial performance? Do you want to take a step at that first?
That's a great question, Peter. I would break it into two parts. I would actually pair driver-based management with variance analysis. To get variance analysis that actually is useful, you want to get behind the mathematical explanation of the variance to the actual driver of that variance. So I can sit down and look at sales and say how much of the variance in sales from one period to another is driven by selling more product, or by a change in the mix of the products that I'm selling. Maybe I'm selling more high-priced products and less low-priced products, so that's why my sales are going up. Or by changing the price of those products. So I'm actually raising prices, but I'm keeping my volumes the same. The real question, the real value is to say, I want to go behind those variances and understand what the drivers of that variance are. Is the driver that I was able to increase price? I ran some really cool promotional campaigns, and I was able to drive customers to actually buy more product, so I got some volume benefit, and they weren't as sensitive to the price increase that I put in place because I was demonstrating value through the advertising and promotional work that I was doing. The second piece around scenario planning and sensitivity analysis is really when you're thinking about the future. Because variance analysis is really looking backwards to say, why didn't things turn out the way we expected? When we think about scenario planning and sensitivity analysis, we're really saying, what if? So if I'm one of you folks sitting in Australia at the moment, a lot of the economy over there is very commodity based, and we've seen a lot of volatility in commodity prices. So one of the things I would be looking at is, what is the sensitivity of my plan or my forecast to changes in those commodity prices? And if a commodity price drops significantly, what action should I take? Should I reduce my production capacity? Should I increase my warehousing so that I can keep the product until prices recover and I can recover a suitable margin in the marketplace? So what I will be doing is looking at my variance analysis and trying to decompose that down into the likely drivers of those variances. And then when I think about understanding those variances and I start thinking, okay, what are the implications of that for my forecast in the future? I can then begin to start to think about the what if analysis around different scenarios, or sensitivity analysis around single variables like an exchange rate, a commodity price, whatever it may be within your particular environment. Hopefully that helps.
Great. David, that actually, and Peter, thanks for that question. That actually reminds me of a scenario too, that as we were thinking and helping customers into the rebuilding phase, I mean, part of what you're talking about is the underlying behind these changes in the supply and demand. And we have also, you know, in one of our customer situation, they're in the life science and the medical devices. And one of the things that is really critical are these specialized plastics. So just understanding where they're coming from, and do I have what I need in order to produce? And do I, once I have it produced, do I have it in the right location? And do I have it near or far away from a distribution center that might have been affected by the situation? So all those are the sensitivity elements that you kind of talked about as well too. I would say again, being coming from the Synity data centric view, there are two things that I would really highlight, Peter and others as well who have the question. Number one is looking at the data relevancy. What data and what sets of data and what type of data is relevant in your analysis? Number one. Number two is that how well can you trust the data in terms of its quality, in terms of its context, in terms of how does it actually connect back to the particular business rules and the business policies that you may have set aside. And therein, part of the conversation that David, you were alluding to as well too about data governance. And those are all different data aspects and challenges as well as opportunities that we help our customers with as well. And I'm going to drop in here, and being the Chinese here, there is a Chinese word when we look at opportunity and challenges. The Chinese word is exactly the same word. It's how you look at it. It's how you turn it around to say, is it a challenge or is it an opportunity? So on that point, I do want to use one example and one use case, and leading into the reimagination part, right? You can kind of see there's a little bit of a blue text. So we've been in this business for a long time. We have been following specific industries, and there are companies who would programmatically activate their programs to acquire or divest. And those who do that on a programmatic basis, according to BCG, actually outperforms their peers. So on that point, I'm going to pick a bet because this is one of the bets that we here at Synity believe that many of the large enterprises, especially those who has healthy cash positions, is going to begin to activate and look at merger and acquisitions. And for those organizations who is really thinking about how do I return to core and therefore potentially divest part of their business. And the reality is that when you look at it, and I'm going to take you to the next page, it's a little bit hard to see. But the fact is that, as many of you know in the finance community, the normal steps of a merger or acquisition or divestiture is pretty much the same, right? You begin with due diligence, and then you begin to do the valuation, and you begin to plan for day one and start sorting out all the different customer data and all the likes. And there are multiple steps, and they are very programmatic. What is illustrated here is a linear fashion, and I've been in these situations myself when I was at IBM, as well as with SAP and here as Vicinity as well, that some of these steps actually overlap. But there is one constant, that regardless of what steps you're in, data is in every single step. And when I mentioned about relevant data, the relevancy of data changes depending on what stage you're at in looking at these investment alternatives, or these bets, if you will. Some of you may be looking at this at mega scale. Some of you may be looking at it in smaller scale, or just purely looking at either diversifying or consolidating your portfolio. But regardless, our point of view is that you have to have a very clear, laid right on to the relevant set of data, be it finance, be it material, be it employee, customer, and the likes. And there's so many of these. And seeing them in aggregate and seeing them in integrated and have the data integrity to apply to the respective stages that you have to make your decisions on is going to be powerful. On that point, I would like to set up this next, just to kind of get a sense from the audience here, because I can see that we represent a whole spectrum of different industries. In terms of which are some of the data sets that is most critical or top of mind to you? And I'll go through them very quickly. Customer data, material data, vendor data, receivable data, or there's always a catch-all is all of the above or none of the above. Let's take a look at what everybody thinks. it's interesting, right? Because I think we started saying is the first pick right away was customer data and everything else. And vendor data is one that we actually very, very keenly work on, particularly through the process of procure to pay, as well as order to cash. And I would presume that that's two business processes that this audience is particularly keen on about as well. And at the end of the day, and we say the same thing, is that, you know, customer drives what we do, and what we do is here to serve the customer. So I'm glad to see it is kind of a composite view, isn't it, David? It's all of the above.
Yeah.
Leading with the today.
I'm really heartened by the response to this poll question, because given our audience, there are a lot of finance professionals here. When I started my finance career, all I was interested in was making sure that my accounting data was accurate. Our world has changed dramatically. And to see that our finance peers are now beginning to embrace the broader scope of data across the enterprise is a massive step forward. Our ability to partner with our friends in sales and marketing and our friends in supply chain and in other parts of the organization to begin to capture the value of this very rich and diverse set of data that we now have available to. Finance is increasingly playing a leadership role in that space. I have a client today here in the United States that does business in 110 countries around the world, and finance has taken on the role of global data management because no one else was stepping up to the mark. And finance had to, because they had to assure the quality of the financial data. But as they moved into driver-based forecasting and scenario and sensitivity-based planning, they needed to assure that the driver information, customer data, vendor data, material data, was accurate as well, because that was the data that was being used to drive decision-making. So I think this is a huge step forward. We just need to enable ourselves to be able to do it.
Yeah, and in fact, it's interesting too. So you're coming from the financial side, and I'm coming from sales and marketing, because that's been my heritage. And it's really equally compelling to me as well too, that we all really anchor into the customer data, which maybe if you look at it, is kind of the composite view of everything underneath it, right? Whether they receivable, what have you. And then vendor data was interesting as well too. I think that's actually we can have another webcast just to talk about the whole vendor situation. So I'll pause right there. So let me kind of bring us home a little bit to wrap up here. Given this is the financial data, I know you're like me, is all about the numbers. So I have taken liberty, and just because I'm the CMO that I'm gonna, project the rights here, I'm prevailing and a study that is to be announced actually Monday, this coming Monday. But for this community, you are seeing it for the first time around the world. That we have, alongside with our partner in SAP, ourselves, Synity, and SAP commissioned a business value study by IDC. During the study, which took multiple months for that matter, they interviewed at depth, in deep depth, with 8 of the global enterprises who are both jointly Synity and SAP customers, and really work through with them to help us quantify the impact if you were to do a transformation, as an example. In this case, some of them were S4 transformation, S4HANA, some of them was success factors, and some of them was a multitude of combining different ERPs into one. And I just wanted to really showcase to you that with our expertise and with the solution, which is based on what is referred to as SAP Advanced Data Migration by Synity, the top line benefits was that of 303% free ROI, 8-month payback. So for the finance community, for those in your community and your stakeholders, as they come to you looking for business cases, and this is really one of the reasons why we wanted to very quickly help identify that. And through a composite of whether it's IT cost, labor cost, system integration cost effectiveness, as well as the overall program cost, the average annual benefits was to the tune of $3.5 million. So this study will be available beginning, as I mentioned, next Monday. So Raymond's going to kill me now that I have actually debuted it to the world. But hey, you are our community, and this is a community that I'm very, very close to. So you get a first chance of looking at it firsthand. And with that, I just wanted to thank you for your attention. And David and I are available to see if there's any other questions for the few minutes we have left. I'm hearing some tick, 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 tick. Is that the tick, tick, tick for the question? If there's no immediate question here, I do have one for you, David. That in your entire spectrum in the last 30 plus years advising as well as practicing, what is the one advice that you have for those of us in the financial space that historically would be looking at structured data, rows and columns, right? Like you said, spreadsheets. But now to embrace a much bigger, more composite, democratized sets of data, what advice do you have for them?
I think it's really interesting for us as finance professionals because we've been taught that things add up, they balance, and they're right. So being comfortable with ambiguity and uncertainty, I think, is a very, very hard task for many of us. I still struggle. You look at numbers in a management report, and then you look at numbers in a forecast, and you sometimes give them the same weight, even though the forecast is trying to predict the future. And frankly, our crystal ball just isn't that good. So our job as finance professionals is to provide insight and context that enables our business partners to begin to understand what is important and what is relevant. And I come back to the point I made a little earlier. I strongly counsel for you to think that finance's job starts when you deliver the report or the analysis, because it's only as good as the understanding, interpretation, and decisions that your business partners take based upon that information. And once you have that mindset, it really have a foundation to really start to think about the business value that finance can deliver.
Yeah, and if I may add to that, my advice to this community is that as you think about and look at the data in front of you, think of the sources, think of the quality of that data, and think of what you're putting into your analytics engine is only as good as the data that goes in. And we'd be very, very pleased to be a part of helping you as well. So with that, I think we should hand it back to Steve.
Yeah, thank you. Thank you so much, Zarina, and thank you, David. David, I want to thank you, our keynote expert, for bringing your excellence, your thought leadership. As always, it was incredibly fascinating to listen, and to you, Zarina, our host, and our sponsors, Synity. Without sponsors, we wouldn't be able to bring this thought leadership, both yours, Zarina, and David's, to our community. So a big, big thank you to Synity for enabling this. And thanks to you, our audience, for attending, for giving up close on an hour to come and listen and be a part of it and share your question, Peter. Our next finance webinar is going to be in a month's time. It's also going to feature David. It's going to focus on accounting close, streamline and automate the big three close activities, and on-demand close visibility and control. In about 4 hours, this session is going to be downloadable. It's going to be on demand if you want to rewatch it or you want to share it. And of course, if you want to ask any questions, you've got both David and Zarina at Synity's email address, so please feel free to contact them. And take great care. Again, David, Zarina, Synity, a big thanks, and to all of you, take care, and we hope to see you next month. Thank you very much.
Synity. Infinite potential unlocked.